Hello friends, welcome to the channel. In this channel we are going to see about the analysis on stocks and we will be sharing our knowledge and the learnings on the stock market and also share our suggestions or the recommendations which we on the stocks which we analyze. So quickly moving on to the stock for today. It's on the fertilizer sector. The company started around 1985 and this got listed in both the exchanges in around 1993, so which is almost 20 years now. This stock has been traded in the exchanges, and they have business in other domains as well, like textile, shipping, and recently they have ventured into the software as well. And during the recent evaluation or the ratings by Chrysler, they have evaluated this company as a stable one on a long-term view. So Chrysler is a body where they evaluate each and every company based on their performance, based on their balance sheets, and also on the prospective business. So while during this process, they have rated this company as one of the stable company on a long-term view. So we are discussing about none other than the stock is Chambal Fertilizers and Chemicals. So this is where the this is the history of this stock. So quickly moving on to their financial performance and also the holding patterns and where it stands against the peers. So on the financial performance, it's all in one slide. We have taken a consolidated annual numbers and we have taken 3 years to check on the data. So if you could see revenue, profit, and everything, it's also on the uptrend. I mean, it's all decently poised on an uptrend view. And EPS stands at around 37 so far this year, and last year they peaked to 39. So even if we keep an average of say 30, what they have done in 2020, I think that is still a very good number for in a long-term view for the investment. And book value is again 153, which is a very good number. The current market price of the stock is around 280 to 290, and the book value itself is 153, which is again a healthy sign for us to invest. And ROE, it's again around 25% this year, and last 2 years if we compare on average they have made 30%, which is again a return on equity seems to be healthy. And the ratios where we see price to earning stands at around 7.9, price to book value is 2.34, and dividend percentage is 2.52, which is again showing that it's in a buy zone area. PE and PE ratio is very less. It's an attractive valuation where we can invest on a long term. So most of these data I would also say that have been taken from Money Control. So that's the source of data we get for the stock. And dividend percentage, if I want to touch base, since we say we hold on a long-term view, it's our maybe in few months we would get our investment back, I would say, in terms of dividend, because of late we get so many interim dividends as well, and that is again an healthy sign in the stock. So moving on next on the holding patterns, we have 60% hold by the promoters themselves, and FIIs they have around 14% till last quarter. And if you could see, it's increasing, it keeps increasing from Q2 to Q4, 11, 12, and 13. So that is again one of the positive sign of for the stock, where FIIs keeps their allocation getting increased in the stock. And this stock, I should also mention this, that this stock has corrected almost close to 120 rupees now. From they were at around say 400 ranges, and today they are at around 280, So probably, when we see Q1 2022 holdings, we could get some clear picture. FIIs might have reduced their stake as well, but I don't see that as a big worry or a concern, at least now, because if we notice, FIIs have been selling left, right, center in almost all the stocks. So obviously, even this stocks would have been impacted by the selling. If you could see, HDFC Bank, so where FII holdings are high, they have reduced their stakes. So possibly once they come in again, which they, definitely we expect them to come again, and this stock will again picking up the rally. But leaving that aside, on a general valuation perspective and also on the financial perspective, this is the right time for for the investment for this on this stock on a long term view. So moving on to the next slide, it talks more on the peer comparison, where we compare our stock, the Chambal fertilizer, with others. So it's a quick view. It's very self-explanatory. Where if you see that P ratio, price to earning, is less for Chambal fertilizers other than GNFC. Coromandel and Tata Chemicals is, I would not say overvalued. Again, they are at the buy zone area only. But when we compare with, those two, Chambal fertilizers is even more attractive in a buy zone area. And EPS is pretty decent, which we saw in the earlier slides. And dividend, again, it's the top when we compare with other peer stocks. So GNFC all would be seeing that number EPS 110. I believe that could be some additional income through some source. So probably that's the reason it's bubbling up. We have to see. We have to wait and see for this quarter how it performs, because on an average, again, GNFC, I saw it is 30 to 40 was the EPS for them. So last quarter alone, I think it was something spiked. So we don't need to take that data too much into consideration for us. So overall, this stock looks to be very attractive at the current price for the investment on a long-term view. So that is, I mean, the correction all happened due to the heavy FII sellings, and there were so many. I mean, as I said earlier, FIIs have been selling in all the stocks, so probably this stock would have been one on their list as well. Overall, just to reiterate that it's one of the good stock on a buy zone area, and we can invest current at this time with a long term view. At least it should reach back to their original levels, and also even more than that is what I expect. So with this said, we are coming to the end of the presentation. So thanks for patiently watching this presentation. So we will keep posting some of our ideas and on the stock market and the analysis once we have start once we get some input on that, and we will keep uploading the videos. Thanks for watching. Stay safe. Thank you. Bye bye.